So, welcome everyone. This is Krishna Kumar hosting this webinar on behalf of Definedge Solutions, and we will continue our discussion on the performance matrix. So, before getting into that, let's quickly look at what the markets are doing. Let's get an idea about uh, what uh, what the charts are talking about the Nifty, and then we will get started with our agenda. Right. So this is spot Nifty. Let's make it percentage 0.1%. That is a default setting that we prescribe for daily chart. So what is the setup become now? Do you guys remember we had the discussion about setups, isn't it? Anyone? What will the setup be? What does the setup consist of? Trend and pattern. Wonderful. So trend is nothing but what the price is doing in relation to the moving average, right? If you don't recall, let me just give you an idea about what we discussed. This will probably help you in refreshing your memory. Setup consists of trend and pattern. Trend is nothing but where the price is in relation to the moving average. So if the price is above moving average, trend becomes bullish, and otherwise it's bearish. And of course, pattern, we have three different possibilities: bullish, bearish, and neutral. So here price is above the moving average, trend is bullish, but the pattern has become bearish, right? Because we have a high pole pattern. The software has already identified it for you. So we have a high pole pattern. So the setup is going to be neutral, right? So whenever there is a conflict, if you look at the setup guide out here, whenever there is a conflict between the pattern and the trend, the setup automatically becomes neutral. If both are in sync, it will be either bullish or bearish. Yeah, I've pressed the record button, Rakesh. No worries. So the session is getting recorded, not an issue. Thanks for the alert, though. Okay, so the setup is neutral, so we just have to wait and see whether this column of O continues to progress lower and how far it goes and stuff like that. I wonder if a fresh sell signal has been triggered today. 10,526 is the low, and your sell trigger will happen at 481. So somewhere around somewhere here, this column would have extended up to this point once today's price data is updated. So a signal has not yet been triggered, but it doesn't matter because for all practical purposes, the setup has turned neutral from bullish. So, and if a sell signal gets triggered, it's going to be a what will that be? If a signal gets triggered, what is the pattern that will be completed in terms of point and figure? One will be 100% pole, right? If this column of O continues further lower, and if we end up triggering a sell signal, it's going to be 100% pole. It's also going to be a bull trap, right? It will become a bull trap only if the current column of O continues further and triggers a sell signal. So if that happens, it will be a bull trap as well as a 100% pole, a bearish pole, right? And it will also mean that this high becomes a mini top, right? Everyone with me until now? So for this high to become a mini top, the sell signal can happen in this column or any subsequent columns. It doesn't matter. For the mini top condition, the sell signal can happen anytime after the high has been made. so it doesn't really matter. But for the bull trap and the 100% pole, this column should continue further down and trigger a sell signal. That's it. So the question now is, have we made a significant top here, and are we in the process of making a bigger degree lower tops and lower bottoms? So so that is a crucial question, and unfortunately I don't have any answer to that. We just have to wait for the price to tell us what is in store. So the question is, are we going to do something like this, or are we going to do something like this? So, which of the two scenarios is going to play out? We really don't know. In fact, no one knows. So, if somebody tells something, everyone is right until the price proves otherwise. Everyone can have an opinion and consider that his or her opinion is the right opinion until the price proves you wrong. So there's no point getting into that exercise. So the big dilemma now is between these two scenarios, which one is likely to play out? Are you getting the broad gist of what I'm trying to say? And of course, if you're somebody who is interested in looking at patterns, I don't know if if this will qualify as a head and shoulder pattern, and this will probably be your neckline. Okay, the neckline is slightly off. So I'm not a big believer of these patterns, but definitely I think people can probably confirm uh, s- or reject my analysis. But this could probably end up being a head and shoulder pattern. I really don't know. Okay, can we check Bank Nifty? Why not? We will take a quick look at Bank Nifty. So at the moment we are typically at the crossroads, and we just have to wait for further price action. Maybe we get into a dull month of December, wherein typically not much action happens. At least the general belief is that the entire world gets into a holiday mode, and Christmas and New Year holiday mode, and nothing much really happens. So that is a general expectation, and maybe that plays out this time. Who knows? Okay, let's take a look at Bank Nifty. Is it called Nifty Bank or Bank Nifty? Okay, Nifty Bank. Percentage, what is it? 0.1 or 0.15? What is the default setting? It doesn't really matter. It's not going to make much of a difference either which way. So this is how your Bank Nifty chart is looking, and let me quickly check what the Bank Nifty did in the spot market. So I think Bank Nifty was down 1%, and 25,100 was. So I think a sell signal has been triggered today, right? In Bank Nifty, a sell signal has been triggered. We have X at the same level. So we have a mini top, confirmed mini top formed here, and of course if you look at the targets, uh, the downside targets have been achieved already. 24,111 is pending, but okay, we came pretty close to that. 24,400 was the low. So other than that, I don't think there is any meaningful downside counts left. So this column qualifies, but the count will be meaningless. So we would have already achieved those counts there, right? So in terms of give me a second. So in terms of setup, we again will have a neutral setup, right? Because the price is above the moving average, but a sell signal has been triggered today. Based on what we have yesterday, probably you can argue that the setup is still bullish. But if once today's price action is updated, the setup will turn neutral. Double broadening, I don't think so, right? Where is double broadening here? It's a simple case of here. I think X is at the same level, isn't it? 26 261.78 and 261.78, and we just have a sell signal today. That's it. So if this low gets taken out, this is your higher mini bottom, right? We had a mini bottom completed here, then we had a higher mini bottom over here, and if this mini bottom is taken out, which is at 25,520, if that is taken out, then it will be a serious sign of weakness. And of course, on the higher side, again, I don't think there is any significant upside targets that's pending. So we had a broadening pattern here. Had this column continued and triggered a breakout, we could have used this column of X for calculating targets, but that hasn't happened. So the count is established but not yet activated. So it will get activated only if we get a breakout above the high of this column of X. Okay. So we'll just have to wait. We can't do anything about it. And on a broader scale, if you look at it, actually Bank Nifty is showing a lot more strength in relation to the Nifty, and basically Bank Nifty has been doing nothing for best part of this year. If you notice, we have broadly been stuck in this range, right? So roughly around what is this? The high is 27 500 roughly, and the low is 23 700. So we have been stuck in this 1500 2000 point range for the best part of best part of this year. We have been moving up and down in this range. So if we manage to break these lows and the low of this column, then I think meaningful trending move can happen. Similarly, otherwise, if we get a breakout above the highs, that will be meaningful. Otherwise, this grind can probably continue. And I'm just wondering which stocks or sectors will have the power to take the Nifty higher. If you look at it, pharma sector has turned very weak, and if you go to okay, let's take a look at the RS matrix. Let's look at the sectors, right? So if you look at the individual sectors, let's see if there is anything that's striking. All sector select row. Oh, we'll get to that. I like to just stick to this one. This probably covers most of the things, right? This sector will not cover your Nifty mid cap, small cap, and other things. So this covers all those sectoral index. So I'm just trying to find out which sectors are showing some strength. So financial services is right at the top, and it's showing a lot of strength. And other than that, the rest of the pack doesn't give you too much of confidence, right? So only the financial services sector has a score of +2 across all the box sizes. So everything else, you don't even have a decent enough positive score in the other sectors. And if you look at the bottom of the heap, you have PSE, metals, CPSC, auto is gone, pharma has turned very weak, IT, which was one of the leading sectors, has turned very weak, and realty, everything. So the only positive sectors are MNC, infra, bank is sort of there, so it could turn either way. I wonder what will happen to the banking RS score after today's move. So the biggest box size it is positive, and the lowest box size it's positive, and it's sort of negative in the middle time frame. So it's all like in the midst of a big a churn that's happening. So let's see how this gets resolved. Except for the financial services sector, I don't see anything which is really worthwhile. So let's quickly see from the financial services sector which are the ones which are really doing well. So again, my guess is it will be a couple of private sector banks, your Bajaj Finance and stuff like that. Let's see. Okay, it's over. So let's sort it on the descending order. So the top performing stock is REC Limited, Bajaj Finserv, SBI, Bajaj Finance, ICICI Bank. I think most of the stocks were in the losers list today, right? PFC was a loser. ICICI Bank, I'm not too sure. Looking at Bank Nifty, I presume ICICI Bank would also have been a loser today. And it doesn't look too promising to me, the entire list. So, if this is a very crucial sector as far as the Nifty is concerned, because financial services contributes or it accounts for a big weightage in the Nifty. So, if for whatever reason, if this sector also turns a bit weak, then Nifty could be in some serious trouble. So, if you notice what has actually happened, one good thing that has actually happened is that okay, let's look at the. How many of you guys know what a ratio chart is? How many of you guys are aware of the relative strength chart? Have you heard of it? Have you used it? Ratio chart. Ratio chart is nothing but I'm going to plot the ratio of Bank Nifty. Bank Nifty is will be in the numerator, and the denominator is going to be Nifty 50, right? So I'm just plotting a ratio chart here. Okay. So if the ratio line is moving up, it basically indicates that the numerator, which is Bank Nifty in our example, is outperforming or doing better than the denominator, which is the Nifty index. That is a simple interpretation. Okay. So if you notice, somewhere around January when the Nifty topped out, right? The first leg of the fall was primarily contributed by the banking sector. It became a big underperformer, and it was instrumental in pulling the index down. And then when the Nifty bottomed out in March end, and when the rally second leg of or the final leg of rally happened, it was the banking sector that contributed in a big way. And then before the market could eventually top out, if you notice, banks started underperforming, and the fall was triggered primarily by the banking sector, and then it got into a very healthy recovery phase, and Nifty eventually bottomed out as in it went close to that 10,000 mark, and turned around, and we had a rally of around 600 700 odd points. So in that leg, the banking sector played a big role in propping the index, the Nifty, to up to 10,700 or 800. So the question now is, is the financial services or the banking sector going to play an important role again in pulling the indices down? I really don't know. But if you look at the ratio chart, we are somewhere around the resistance level, isn't it? So maybe not. We don't know. So this ratio chart, we can plot the ratio chart in the point and figure format. I don't know how many of you guys, regular TradePoint users would have definitely used it, but people who are relatively new to TradePoint, I don't know how many of you guys have used the relative strength feature that's available, wherein the ratio line that we saw just now as a single simple line, we can plot the same line using the point and figure format. So the interpretation, everything is the same, just that instead of looking at the individual price, we are looking at the relative strength chart. So if the price is in a column of X, it basically means that numerator, which is bank nifty, is doing better than the denominator. And if price is in a column of O, it basically means that the numerator is underperforming the denominator. So okay, Akhil is talking about some news element. He's saying that this month we have a lot of commercial paper redemptions in housing finance companies, and he says he's not sure if there will be any default from the the companies that have issued papers. So we'll have to just wait and see. Maybe some default out there might trigger a next round of crash. You don't know, because the first round of crash was what shall I say? It was fueled by Island FS, right? Then some concerns relating to DHFL and whatnot. So, getting back to our discussion here, if you look at it, we have basically been range bound, right? Nifty versus Bank Nifty versus Nifty. So this area is a clear resistance. We went there twice and we failed. So third attempt, I don't know what is going to happen. Whether we are going to fail again and head lower, or whether it is going to be a triple top buy and a fresh rally, which would mean that the Bank Nifty is going to outperform the Nifty. But again, imagine a scenario where Nifty falls by say 10% and Bank Nifty falls by say 8%. uh, Even in such a scenario, you will see a breakout in this chart, right? So just because we are in a column of X and we are piling on one X above another in the same column, it doesn't necessarily mean that if you put your money in the banking index, it's going to deliver you returns. This chart only tells you that the numerator is doing relatively better than the denominator. If the denominator by itself is not doing well, then the numerator, it's not going to do anything spectacular. It will probably do slightly better than the denominator, but everything depends on what the denominator is doing. So is that clear what I'm trying to say? Whenever you are getting into this relative strength analysis, you have to be absolutely sure about how to interpret the lines, and you have to be absolutely clear about what the benchmark or the denominator is doing. So in our case, the denominator is Nifty, and after yesterday's and today's price action, I'm not too sure what to expect from the Nifty. So if you think Nifty is probably heading lower, then you need to be really careful, and you should be looking at the underperforming sectors to identify shorting opportunities, or probably get rid of those stocks which are from the underperforming sectors. Clear? So the important message is, whenever you're doing a ratio analysis or a relative strength analysis, it's absolutely critical to understand that the denominator plays a big role in terms of trying to interpret and decide what kind of action that needs to be taken. So look at the individual price chart of the denominator first and understand what it is doing, or what the trend is, and stuff like that, and then have a look at the ratio chart. Makes sense, or does it sound too confusing to you guys? Am I audible, guys? By the way, someone has mentioned that the audio went off again. I'm just curious. Audible, fine. So any doubts on what I said, the importance of the denominator, and you need to be absolutely clear about what the denominator is doing. Okay, fine. So what I will do now is, see, until last week, let's get back to our discussion on the performance score and the matrix and stuff like that. Let's probably be done with the performance score with today's session, and we'll get to the ranking score, or we'll start afresh with ranking scores from next week. Okay. Actually, I thought of going into ranking scores this week, but I felt we didn't talk about the performance score with respect to the relative strength chart. If you remember, if you look at the slide here, right, we were discussing about the performance scores in the last couple of weeks, isn't it? And as I told you, the performance matrix scores can be calculated on the price chart as well as the relative strength chart. So all along in the last couple of weeks, we were focusing our attention energy on the price chart. We were trying to look at different combinations. We are trying to interpret what the scores of plus one or minus two means, and stuff like that. But the entire discussion was focused on the price chart. So let us try to focus on the relative strength chart and try to find out what it means and how to interpret the performance metrics on the relative strength chart. And once we are done with this leg, from next week onwards, we will start off with the ranking matrix, and then again we will consider about how to interpret ranking matrix in the price chart as well as the relative strength chart. And then finally, we will take a wholesome the entire picture, holistic picture about what this matrix is and how to integrate them, right? So uh, so coming back to the first slide, we have been focusing on how to interpret the performance scores in the price chart. In the relative strength chart, it is the same deal. There is no difference in terms of how we assign the scores. The scores, it is going to range from -2 to +2, and the scores could be anything between -2, -1, 0, 1, and 2. It's the same deal. No difference at all. The logic is the same. Everything is the same. The only difference being, we will be looking at the relative strength chart, and we will be looking at the pattern, and whether the last column is a column of X or O, and then decide what the score needs to be. Do you guys remember that? How the scores are assigned? We had the discussion, isn't it? Hope you remember it. The same logic. Just in case if you don't recall it, you can have a quick look at this slide, and it will be a good refresher, I presume. So we are basically looking at whether the price is in a column or a column of X or O, and whether the last triggered signal is a buy signal or a sell signal or a triangle, right? So if it is buy in column of X, maximum score of 2, and sell in column of O, maximum the worst possible score of -2, and anything else will be either 1 or -1 or 0, right? So hope you guys recall it. And this of course is a diagrammatic representation of the scores. So a buy signal has been triggered, price is in a column of X, you get a maximum score of 2. Similarly, buy signal triggered but price is in a column of O. In that case, a score of 1 is given, and sell and column of O is -2, and sell and column of X will be -1. So we are going to use the same logic, the same table, everything is the same. The only difference being, we are looking at the relative strength chart. So this is a ratio chart of okay, this is not a ratio chart. This is a ratio chart, right? So we are going to use the same logic, but the only difference being, we are looking at the ratio chart, and we are going to use the same logic to assign the scores here. Okay, so in this case, okay, let's look at the 0.25% box size. So what is the score going to be for this chart? So what are we supposed to do? Two questions we have to ask, isn't it? First question, the easy question is the price in a column of X or O? We are definitely in a column of X. The second question being, what is the pattern? Pattern is definitely a double top buy, right? So we have a double top buy, and price is in a column of X. So the score is going to be 2. I hope there is no confusion there, isn't it? Okay. If I make it if I increase the box size to 1%, what is this going to be? Prices are in a column of X, and the last triggered signal was a sell signal, right? So the score is going to be -1, right? Clear, everyone? So if you no, we don't have a low pole here, isn't it? We don't have a low pole, and even if it is a low pole, it doesn't matter. What we are interested is only in a buy signal or a sell signal, right? The low pole high pole comes into the picture only while calculating or determining the setup. The setup here is going to be this is in any case we don't have a low pole here, so the setup is going to be neutral, right? The trend is bullish but the pattern is bearish. The setup is neutral. Trend is bullish because price is above the moving average, and the pattern is a sell signal, though we are in a column of X. So if you look at the matrix, we were talking about in the last couple of weeks, we were using this matrix table, right? So this matrix table generates the scores based on the individual price chart. So I can, if I choose a particular index here and run the scanner, it is the software is going to look at individual price chart of the individual instrument or company. So we are looking at the coal India price chart, we are looking at the pattern, and whether we are in a column of X or O, and then the score is assigned. Okay, but if you go to matrix and go to RS matrix, and obviously for relative strength I have to give a numerator and a denominator, right? So let's probably just choose Nifty 50, and I'm going to use Nifty 50 again for the denominator. So what I'm trying to do is I'm trying to identify which are the stocks from the Nifty 50 index doing better or worse than. I'm trying to benchmark Nifty constituents versus the Nifty. So what the software is doing here is it is assigning the scores based on this ratio chart. The logic, everything is the same, but only difference is we are looking at this chart and trying to assign a score. Is it clear? Again, we are just focusing on the performance score. We have not yet gotten into the ranking part, which is on the right hand side. So our focus, aim, everything in the last 3 weeks has been confined to this portion. So we will get to this portion next from next week onwards. So a score of 0 has been assigned because the software thinks that there is no clear cut trend here, no pattern, right? We don't have a double top buy or a double bottom sell. The X is at the same level, so it's not a clear cut buy or a sell. So a score of 0 has been assigned. If you look at the 1% box size, buy signal column of X, obviously the score is 2. Similarly, in a 2% box size, the same deal, right? If you make it the box size is 2, a buy signal has been triggered and we are in a column of X, score of 2 has been assigned, and here again it's going to be 0, isn't it? In the 3% box size, we are in a triangle, so a score of 0 has been given. So is it clear now? The denominator is the Nifty 50 index. If okay, if this sounds confusing to you, we can probably look at maybe say private banking index. So see this table, what it has basically done is it has taken the constituents of the Nifty 50 index. So we have 50 companies which form part of the Nifty 50 index, right? So we have totally 50, all the 50 companies, it has been benchmarked versus the Nifty 50 index, and we have got the output here. So we can again sort it on the descending order. And if you look at it, Titan is the best performing company because it has the maximum score of 8, which basically means that it is in a buy signal and in a column of X across all box sizes. So 0.2, 1%, 3%, and 2%. If you choose 2%, there also you will find a buy signal and a price in a column of X. Is it clear, guys? Any confusion? ICICI Bank is number two, and Axis Bank is number three. So you can look at it. No confusions. Excellent. So the question now is, if I have a score of two here, right? If I have a score of two here, it basically means that we are in a column of X and a buy signal has been triggered, isn't it? So what will be the score in the P and F matrix? If I run a if I go to P and F matrix and run that scanner and look at Titan, what will be the score there? What will be the performance score there? Why nine? Nine? It can't be nine, isn't it? How can it be nine? The maximum possible score is eight. It has so if you give me an answer which is some number between -8 to +8, um, uh, that's okay. But come on, guys, everyone, just think. It's sort of a trick question. So apply your mind and come up with the answer. So the question is, for take the example of Titan. So we have a score of 8. So what does the score of 8 mean? It is the score of 8 in the relative strength chart or the ratio chart. So we are looking at the chart of Titan divided by the share price of Titan divided by the Nifty value. So every day a Titan closes at a particular value, Nifty 50 index closes at a particular value. So we divide the price of Titan by the value of Nifty, and we plot this chart. So we get a number there, right? That is called the ratio number. So using that number, we plot this point and figure chart. So my question is, Titan, which has the maximum possible score of 8 in the relative strength matrix, with this, can we guess the performance score? If it is possible, what is the likely score? I don't, Akhil. I think you're getting slightly confused. We are not looking at the. See, but this is individual for every company. We are trying to look at the performance of that company with respect to the Nifty. Okay, so it's if I click on BPCL, it is the chart of BPCL divided by Nifty. So we are trying to find out between BPCL and Nifty which is doing better, or which is performing, or which is not doing good. Okay, so the simple answer is we just cannot second guess what the performance score could be. We just cannot second guess. Just looking at the our relative strength score, we just cannot say second guess what the performance score will be, because these two are different animals, right? What we are looking at is a Titan. See, but consider a case where a Nifty is in a big downtrend, right? So if Titan does not fall as much as the Nifty, we can theoretically still have a score of plus 8. But if you look at the individual chart of Titan, it can be like it can be in a sell signal and in a column of X or column of O. So it could be a negative number as the score there. So I want you guys, I asked this question just to drive home the point that you must realize that there is absolutely no link between the relative strength score and the performance metric score. It obviously you can make a intelligent guess, or so you can have some expectation, but you will have to look at various other factors as well. Just by looking at the score in the relative strength matrix, you cannot second guess that it has to be a very high positive score. Is it clear? Because we are dealing with two different concepts here. What we are looking at on your screen now is with respect to a ratio chart, and in the performance matrix what you're looking at is the individual price chart. Got it? Did you hope you guys get the distinction there? So if someone, at least someone had mentioned that there's no point second guessing it, I would have been very happy with the answer. Which sector is okay? What we'll do is, just to avoid confusion, let me just run a scan wherein the numerator is the Nifty banking index. So what we are trying to find out here is, from the private banking sector, which are the stocks, or rather how are the stocks from the private banking sector performing in relation to the Nifty 50 index. So we have these many stocks here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have 10 stocks from the which constitute the private bank index. So we are trying to find out how the constituents of the private banking sector are performing in relation to the Nifty 50 index. So if I double click on each of those names, I'll get the individual ratio chart. So in this case, it is Axis Bank divided by Nifty 50. So if you look at it, a buy signal column of X. So the score is going to be, what is the score? Quick. You shouldn't take too much time for this. Plus 2, right? So you have a score of plus 2. And in 1% box size, you have a score of 0, which basically means we should have some kind of a consolidation or a triangle. So the same deal here, right? We have X at the same level, so the software is playing it safe. It's telling you that there is no identifiable pattern, and so I'm giving a score of 0. And in 2 and 3% boxes, we have a score of 2. So we have a score of 2 because we have a buy signal and prices in a column of X. So when Nifty is in an uptrend, that is when the denominator is in an uptrend, you want to be ideally focusing on the companies which have a very high performance score, because those are the companies which are doing better than the Nifty. So if the Nifty is in an uptrend, you don't want to focus on Nifty, but you want to focus on the stocks which are doing better than the Nifty, isn't it? Yes, no, or does it not make sense? Okay. So similarly, if Nifty is in a downtrend, you want to focus on stocks that are performing poorly in relation to the Nifty, so that you can either choose to stay away from them or eliminate them from your portfolio if you are already having them. And if you are a intraday or a futures trader, F&O, then you can look for shorting opportunities in the stocks and sectors that are underperforming. Okay. So that is the basic idea objective behind looking at the relative strength matrix. Otherwise, the scoring options, everything is the same. So there is absolutely no what shall I say, difference between the individual chart and the relative strength chart. The only difference being, in the first instance, we are using the individual price chart. Actually, we can probably, what you can do is, this is your Axis Bank chart, and I can open the Axis Bank price chart also. It need not necessarily be the same. The scores can be different. So at the top of your screen, if you notice, are the four windows clearly visible on your screens, guys, or is it too cramped? Okay, so if you notice in the price chart, if you were doing this analysis as of yesterday, you have discovered that this one Axis Bank has a very high score with respect to the RS matrix, right? It is probably the best performing stock from the RS matrix. If you look at from the private banking sector space, if you notice, Axis Bank has the the highest score of 6 from the sector, right? So what you immediately do is you go to the individual price chart and have a look at it to find out if there is some opportunity to get a trade out of it. So the basic assumption being, if the uptrend continues in the Nifty, Axis Bank is expected to do better than the Nifty. So you want to focus on Axis Bank. Okay. So in in the individual price chart, what is the score going to be? Do we have a buy signal here? 626 not 6. Okay, in this case again, in the price chart we have X at the same level. This is the individual chart of Axis Bank. So what will be the performance score here in the 0.25% box size? It's going to be 0, isn't it? Because X at the same level, the software is going to take it as 0. In 1%, the score is going to be plus 1, right? Sorry, plus 2. So here, if you notice, in Axis Bank, this is what I wanted to highlight to you guys, and I wanted to make you guys think, but you guys came up with a very quick fire answer. I'm sure not too many people out there did take the trouble to think it over. See here in the 1% box size, the score is going to be, what is the score? Plus 2, right? In the individual box size, sorry, individual price chart in the 1% box size. But if you look at the ratio chart of Axis Bank versus Nifty 50, the score is going to be 0, right? Are you getting the logic here? So you cannot really second guess what the performance score will be based on the ratio chart scores. You can make an intelligent, you can get a broad idea that it is going to be a positive score, or it's going to be a high positive number, but you cannot really second guess exactly what the score is going to be. It can be different, right? Do you understand why and how? Okay, so getting back to our discussion again. So does the slide make a lot more sense now? The first 3 4 points we have discussed at length about the performance scores, their logic, and how the scores are assigned based on the relative strength chart and the actual price chart. The logic remains the same, but the interpretation, everything else will be slightly different, because we are looking at two different animals here. One is a ratio chart, the other one being the price chart. So finally, the most important question is the last one. What kind of configuration would you prefer across different box sizes in the RS chart? In the previous week, I gave you some ideas about how to use the matrix output, how to look at the setup in 1% and 0.25% box size, and what to look for in terms of the scores in individual box sizes. Right? We were just trying to integrate everything and arrive um, uh, at actionable ideas. Do you guys remember that? Last week we had the discussion wherein we were using the Excel sheet, yeah, 0112, 0222, and all that stuff, right? So the new piece of what shall I say? A new piece in the puzzle now is this relative strength matrix course. So the question is, how are we going to integrate this new input and how to use it effectively to um, increase the probability of success. So you guys have broadly understood the importance of the relative strength chart, right? Actually, let me show you something else. What was it? Give me a second, guys. Okay, let me just check. Sorry, take right. And so what I'm plotting here is Bajaj Finance divided by Nifty 50. Okay, so where was it? So this was somewhere around February March, when Nifty made that bottom and made the final run up, if you guys remember, right? So this is the Bajaj Finance share price of Bajaj Finance divided by Nifty 50. So from February, the low that was formed was in early February. I think Nifty bottomed out somewhere in the in late March, isn't it? So this stock bottomed out much earlier uh, with respect to the relative strength I'm talking about. So right from February 5th, this stock has been a big outperformer. So instead of focusing on the Nifty, if you were sitting on long positions in Bajaj Finance, you would have made lot more money than say if you were stuck in a pharma sector or maybe some other underperforming sector. If you had put your money in an underperforming sector, you would have lost your money, but the Nifty would have gone up. If you notice in the rally from March end to August highs, a lot of people in social media were cribbing about how the valuations were expensive and this rally should not continue. This is a meaningless rally and stuff like that, right? But there were a segment of people who were positioned in the right stocks and the right industries, in the likes of Jubilant Foodworks, Bajaj Finance, Hindustan Unilever, and stuff like that. The IT stocks. If you were in those stocks and sectors, you would be very comfortable and very happy about what you were seeing on the screen, isn't it? I don't know how many of you guys recall those days and what you got to read in social media. If you were not positioned in the right stocks and sectors, this rally of 10-15% that we saw in the Nifty from from March end to August, you would not have participated in that rally at all. So if you look at the Bajaj Finance chart, that will give you a better idea, or it will be far more hard hitting for you. So we made a low of around 1500, 1600, and we went on to make a high of 2980. So I'm not saying that you could have bought here and sold here. No one can do that. Either you must be God or you must be lying if you manage to do that, right? So what I'm saying is the price has literally doubled from the low here to the high here. Not exactly, but almost 100% returns. But you could have easily captured the the meat of this move. So even if the stock has probably doubled, even if you manage to make a 25-30% or 40% in 3 months, nothing like it, isn't it? So why I am taking the pain to illustrate this or show you both the charts is to impress upon you guys that relative strength is such an important concept that you must be paying attention to. Okay, So a simple double top buy, and if you were trailing a stop loss, see, if you had taken a long position here, your entry was at some 2120 or something like that, and after that a double bottom sell was not triggered at all. From 2140, if you had trailed your stop loss, you would have been stopped out here at 2760. So 20-25% without blinking eye, without taking too much of heat, that was manageable. So in this stretch out here, is this was when was this? This was September. From September to February, September 2017 to February beginning. This one, Bajaj Finance would have been a big underperformer. So this is the time when you must have stayed out of Bajaj Finance. So the moment the ratio chart turns around, and if you see other stocks from the sector also doing well, then you must look at the individual price chart, and you must probably be trading every buy opportunity that you get. Again, the assumption being the denominator is in an uptrend. That is crucial. Don't let go of that fact. From March end, Nifty was in a big uptrend, right? There was a sharp move in Nifty from March end to August. So in that period, instead of focusing on Nifty, had you focused on Bajaj Finance, you would have made a lot more money than focusing on Nifty. Exactly, you can do that, Akhil. So Akhil's question is, can this exercise be done using the ratio chart to identify candidates for short to intraday trades? Absolutely, it makes a lot of sense to do that. So what? Getting back to the question, how are we going to meaningfully incorporate this new set of intelligence that we have gathered, which is nothing but the scores from the RS matrix table, the performance score from the relative strength table, right? So we discussed about how to use the scores in this matrix, the P and F matrix table. Last week and the previous week, we were discussing about how to use the scores from P and F matrix table and how to shortlist candidates. So the question that I'm asking you now is, we have another set of information now, which is the relative strength matrix table. How are we going to meaningfully utilize this information? Any ideas, any thoughts? Just think about it, Akhil. That is basically the question that you asked, but I'm asking the same question back to you guys. So how do we go about it? Should we look at the performance scores from the individual price chart first and then look at the RS scores, or should we start off with the relative strength matrix scores and then come down to the individual chart and the scores there? What do you think will be the logical approach? Yeah, it logically, it's better to start off with the relative strength matrix and then drill down to the individual stocks, isn't it? A top down approach, correct? So probably what you can do is, once a week or whatever, you run this matrix, the RS matrix, wherein just type in NSE and choose the last item there, NSE indices underscore sector, and choose Nifty 50 as the denominator. So what we are trying to do here is to identify which are the sectors that are doing better than the Nifty, or which are doing poorly in relation to the Nifty, right? It's a top down approach that we are talking about. So just click on any of the click on the performance score and it will sort it. So the sectors which has the maximum negative score, it basically means that it is one of the worst performing sectors. So metal, CPSC, PSC, media, pharma, all those sectors are not doing well, and the ones that are doing well are Nifty, financial service, consumption, etc., 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 right? So you will get a broad idea about which are the sectors in favor and which are the sectors that are not doing well. So what you can do is, if you once you think that metal is not doing well, and let me focus on the metal sector, what you can do is go to the matrix, go to p and of matrix, and choose the metal sector, right? Metal index NSC, and run this matrix. So what is it going to give you? It is going to give you the scores based on the individual price chart. So now that we have spent enough time in the last couple of weeks to identify candidates, so what are the scores that we will be interested in this matrix, depending upon what the relative strength told us? What is the score that we must be focusing on? So what are we basically looking at with respect to the metal sector? Are we looking for long candidates or short candidates? We are looking for short candidates, right? Because metal is a worst performing sector. So we are looking for candidates wherein we can get some shorting ideas. So the same deal, right? Whatever we discussed previous week, you'll have to think in the reverse. For long ideas, I was telling you guys that I want a score of one in the lowest boxes, because that is where we can get some fresh ideas to short the next week. So here we should be looking for a score of -1, right? We are not interested in a score of -2, because a score of -2 means we are already in a column of O and a sell signal has been already triggered, isn't it? So what is the point in looking at those candidates? So we want to look at a score of 0 or -1 ideally. So unfortunately we don't have -1 candidates here, but we have a lot of candidates where there is a score of 0. So if I don't know how these stocks perform today, but if there was a sell signal in in these 3 4 stocks, you could have thought about shorting them. If they are available in F&O, you can look at shorting them in futures. Otherwise, on an intraday basis, you can think about shorting them and covering it up by 3 315 or whatever. So any clue, guys? Any of these stocks? Metal index was down today, so I'm sure about that. I'm just wondering how, if there were any stocks from this list which was a big loser today. Tata Steel, okay, fine. In fact, what we can do is we can just we can take a look at the individual price chart. We have this one F&O. So which one? Coal India. Okay, it takes a little time to load the data. Wonderful, isn't it? We are looking at a 1 minute chart, 0.15% box size. So a triple bottom sell. So when things work, it works perfectly well. Your downside targets are met and all that, right? So Coal India, if you notice, it had a score of 0, and a score of 1 in 1% box size, and -2 in 2% box size, and a score of 0 in 3% box size. So basically the stock is doing nothing at all. And if you're looking at what shall I say, extreme short term trading opportunities. Extreme short term, I mean intraday to maybe a few days holding period, especially in F&O. You should typically be concerned with the 0.25% box size and 1% box size. There's no point looking anything beyond that, because your time frame, your holding period is so very narrow. you're not worried about what is the time frame beyond 0.25% and 1%. And of course, your metal sector has been a big underperformer. So obviously, if there is going to be a sell idea from the stocks from this sector, you should be interested in them, right? How about Hindustan Zinc? Where is Hindustan Zinc? Same deal, right? Let us take a look at the Hindustan Zinc. Is it there in F&O? I don't trade stocks here, so my question might be slightly silly, but bear with me. So I don't deal in stock futures, so I'm not too sure about some stocks being in F&O or not. Okay. So if a buy signal is triggered, you're not interested in the buy signal, right? Because the sector is an underperformer, so you're not going to buy that stock in any case. And Nifty was bearish for best part of the day, so you'll be looking for shorting opportunities, right? In any case, even if the Nifty was bullish, you would be looking for bullish opportunities in some other sector, not in the metal sector. So you would not have been interested in this buy signal in any case, and you got a nice sell signal, and it would have been a big, nice, profitable trade. But of course, it depends on whether this risk is affordable to you and stuff like that. Because I don't know the lot size and other technicalities. So it wouldn't be fair to say that you could have shorted here, stop loss over here. Whether this risk is digestible and other things, I don't know. But all said and done, this was a nice profitable short trade. At least you could have taken a short trade of 100, 200, 500 shares in cash and squared it up by 3 o'clock or 3:15, right? Probably it will take care of your Starbucks visit for 3 4 people. Makes sense. So the top down approach, is it making sense to you guys? So what else can we do? See, how about, okay, if you're trying to build a portfolio, what you can do is use Nifty for 500 as the numerator and Nifty 50 as the denominator. Okay. And if you click on scan, I am not clicking on scan because it's going to take a lot of while for this table to be generated. So I don't want to do that. Yeah, you can do lots and lots of things with this software. As I keep telling you guys, the only limitation is your creativity, your imagination. That's it. Otherwise you can do lots and lots of stuff. Just that I'm not into F&O in stocks. I'm feeling hamstrung because I don't have scanners, intraday scanners for the cash market. So if there is if live cash rates are available, I will be happily going long or short in individual stocks on an intraday basis. Okay, so getting back to this, I'm just going to give you some broad ideas. I'm not going to get into the details here. We have a long weekend, so you guys do the hard work and come up with the candidates' ideas and however you want to implement it. So one of the things you can do is uh, run the scanner, try to identify. So what will this scanner throw up? S- Okay, instead of doing that, we can do something else. You can do the same thing with respect to Nifty 500. See, but what you can do is, what I'm trying to achieve here is, I have chosen F&O stocks as a numerator and Nifty 50 as a denominator. So this is a RS matrix. When will we get cash live? Not in the near future here. It's extremely expensive. NSE is charging a bomb for that, and I don't think too many people will be interested in that in any case, because most of the people, the active traders, are interested in F&O, which is why we went for F&O futures and options. So cash, I don't think. it's going to happen anytime soon. Maybe if there is a lot of interest and stuff like that, we might think about it. But at the moment, I don't think it is in the agenda either. So, what is this output going to throw up? The numerator being F&O stocks and denominator being Nifty 50. If I double click on Amar Raja batteries, what is it going to throw up? What chart will it open? Come on, guys. You should not take too much time for answering this question. If I double click on Amar Raja batteries, it's going to give me. Is it going to give me the share price of Amar Raja batteries or something else? It's going to give me the ratio chart, isn't it? Because we are using the RS matrix. Okay. So if I double click on any of this instrument, it's going to be a ratio chart of the instrument or the stock concerned divided by the Nifty 50. Okay. So what am I trying to do here? I'm just trying to collect the scores, the relative strength scores of all the stocks from the F&O universe. So this table is going to give me the output of uh, how the individual F&O stocks are doing in relation to the Nifty, right? So what I can do as usual is export this to Excel. So once it is over, I can export it to Excel, and then I can import. What am I trying to do here? What should I import? Can I not pull in the performance scores based on the individual price chart? I can do that, right? I can pull in the performance score based on the individual price chart, and I can also pull in the setup, isn't it? If I run this, if I run separately, if I go to the P&F matrix and choose F&O universe, okay, and click on scan, maybe I can rerun this using the setup, the boxes in the setup as 1%. So basically, I'll have three different files. So I will use the relative strength file as my base file, and I will incorporate the score, the performance score from this file, and I also want to pull in the setup, in 0.25% box size and 1% box size. If you're really particular about that, you can pull in the setup from those two box sizes as well, right? And then you can shortlist a set of stocks which you want to focus for going short the next day, and you can also shortlist a set of stocks which you want to focus for going long the next day. So depending upon what the Nifty is doing, see, within half an hour or 45 minutes of the market opening, if you look at the NSE site, or if you look at your broker terminal, most of the broker terminal gives you the performance of individual NSE sectoral index, right? You can easily find out which is the sector that is doing well for the day and which is the sector that's not doing well for the day. And you can easily, if you have the list of candidates ready made, so you can easily decide which are the stocks you should be focusing on, and you can go ahead and implement the trade. It's going to be a very high probability trade setup that you're looking at. Does it make sense, or does it sound too confusing? So what are we trying to achieve here? So we are trying to collate intelligence from all the tools that we have. So we started off with the R&S, sorry, the relative strength matrix. So we have the individual performance of the stocks in relation to the Nifty. So you can probably sort them in whichever order you want, and on the top of it, you can import the performance scores of the individual charts. So if for instance Hexaware has a score of -8, right? So it means this stock is extremely weak in relation to the Nifty. So this is a potential shorting candidate for you, right? and in any case IT sector is not doing well in relation to the Nifty. So if you have a score of -1 in the performance matrix, so hexaver is something that you should be interested as a shorting candidate for the next day. Does it make sense? So on the other hand, if you look at it, Axis Bank, where will Axis Bank be? It should be at the bottom, isn't it? Bottom, as in we have sorted it in the reverse order. So it is a top performer. So give me a second, guys. I have a call to take. Give me a second. Yeah, sorry, guys. I'm back. So if you notice, Axis Bank and Titan and others should be at the bottom of the heap, right? Somewhere over here, if you notice, you must probably find Axis Bank somewhere over here, or that's okay. Titan is there. So Titan, SRF, BEML, Union Bank, these are the candidates that are doing better in relation to the Nifty. So if the Nifty is bullish, then you must be focusing on long opportunities in these stocks. And if the performance score is 1 or 0 in these candidates, those are the ideal candidates that you must be focusing on. Are you guys getting the logic here? And don't try to correlate or mix and match the scores in this in relative strength versus the scores in the performance matrix. As I told you, they need not be the same, they need not be similar. So look at it separately and don't try to correlate or mix and match, right? Treat them as separate compartments. Try to understand what we are trying to achieve using these two files. Here we are trying to understand how the stock is performing in relation to the Nifty. If the score, if the maximum score possible, which is 2, is assigned, it means the particular stock is doing much better than the Nifty. So that is the limited purpose that this particular matrix serves. The basic idea here is to identify stocks which are doing better than the Nifty or worse than the Nifty across multiple box sizes. That is the only objective. Our individual decision is going to be governed by the P and F matrix, the scores over there, because that is the actual price chart based on which you are going to take the trade. This is going to give you the context. The relative strength is going to give you the context, or the idea about where to look for trades, or which sectors to look for, or which candidates to focus on. And the actual implementation has to be done based on the price chart, the performance matrix. Is it clear? By the same token, can we go along in Divi's Lab? Absolutely. See, Divi's Lab, Aurobindo Pharma, ICICI Bank, Tata Power, all these guys have a very decent, this one, what is it, cumulative score. And if you look at the short-term performance, it's not bad. A score of 2, a score of 1, it's okay. It's not really bad. See, I will be very worried if I have a negative score. As long as there is no negative score, it's still okay. But again, what you need to realize is, though this is a positive score, the relative strength chart is going to be in a column of O. In ICICI Bank, right, a score of 1 basically means a buy signal has been triggered, but we are in a column of O, which basically means in the over the last few days, ICICI Bank is underperforming in relation to the Nifty. But as far as relative strength is concerned, 0.25% box size is very, very dynamic. Okay, so you will be better off looking at 0.251 and maybe 2% also, and get a holistic picture. Don't get influenced by what is happening in 0.25% alone, right? Absolutely, the scores can theoretically change once today's price data is updated. Especially in the 0.25% box size, they can probably change every day. Theoretically, I'm speaking. It can change every day, and the 1% will not be prone to such frequent changes. 2% will be very slow to move, and 3% again it's going to be very slow to move. But 0.25% will be very dynamic. It can change on any given day. It is quite possible. Does it make sense? So just play around, guys. I've just introduced the concept of relative strength and the relative strength matrix. You just what shall I say? Incorporate this also into your analysis and try to make some meaningful conclusion. And obviously, you are going to be stuck with a lot of questions, doubts. So feel free to either drop a mail to me or share your questions in the Telegram group. Either me or someone else will definitely answer. Okay. So let's just wrap it up here, guys. I think I have given you enough food for thought. So it's up to you guys to meaningfully integrate relative strength along with the performance scores, and then come up with uh, the candidates. So thanks, guys, for showing up today, and I just hope you learned something new, and something it was time worth spent for you. I enjoy doing these webinars, and I feel it's the same with you guys. And if you like the presentation, please give us some good press. Talk about it in social media, Twitter, Facebook, whatever. That will be a big motivation for us to make these presentations even more meaningful. Thank you, guys. We'll meet next Friday on sorry, at 4:30. Bye.